So, MPs backing a motion last night in the House of Commons seeking alternative arrangements to replace the Irish backstop in Theresa May's Brexit plan. The proposal had the support of the government and won by 16 votes. Theresa May had wanted the mandate to return to Brussels and reopen negotiations in order to secure a legally binding change. But the EU has said that it will not change the legal text already agreed. MPs voted on a string of amendments to Mrs May's plan to change the direction of Brexit, but all but one pretty much failed. Paul Sedgwick joins us now from Frank Investments. Paul, good morning to you.
Jeremy.
What do you make of what happened last night? We saw, as we saw in the markets, a weakness for sterling, but a little bit of an uptick on the FTSE. What does all this mean for the markets and where we go as an investment community?
Well, I think it's interesting. I mean, last night's events would lead you to believe that Theresa May is eventually going to get her deal through. She said that she's going to go back to the EU. They've said they're not going to negotiate. We voted, the Parliament voted last night and said that they don't want the no deal, but they don't want the extension beyond the 29th of March. So Yvette Cooper's proposal got, as you quite rightly said, got turned down. So I don't know quite where that leaves Theresa May in terms on the negotiating table, because I think that if the EU believe that that no deal is now on the table, and they also know that the 29th of March is the final date, it pretty much looks to me like Theresa May is going to win the day and get her deal through. She may get some minor concessions. Whether she'll get that backstop removed, I'm not quite sure. Sterling's had a good recovery, anticipating this, I think, to a certain degree, and overnight maybe there was a little bit of profit taking from one or two people, and maybe a slight chance, because of the fact that that vote on the no deal was not legally binding, that it did the possibility of a no deal because of no extension to the 29th of March comes back into the equation a little bit more. Then maybe that's why sterling just gave up a bit of its gains.
There's a lot of political commentary around the potential for some brinkmanship going on here, and the EU, yes, coming out and saying, look, we're not going to change it, but ultimately the EU has in the past been known to mould things or to change things or to perhaps maybe reformulate things at the last minute. And I know some are expecting potentially some sort of move. If we do get a deal, and Theresa May's deal does ultimately get through, and by the 29th of March we finally get over the line with an agreement, are you buying into this as a stock rally? Do you think a stock rally could come out of that? What will happen with sterling in that situation? Because, I mean, it's a very interesting situation. We've been hearing a lot about the pressure that's been applied to sterling because of what's been going on, or the failure of any progress in the Brexit talks. If we do get over the line, are you buying into the British markets?
Well, I think that certainly, I mean, on the one hand, I mean, British equities generally look pretty attractive in terms of valuation. I mean, you're getting a pretty decent dividend yield on them of over 4% on the FTSE 100. Sentiment towards the UK stock market is at a 20-year low amongst fund managers. They're underweight relative to their benchmark as much as they have been for the last 20 years. So sentiment on the UK has got particularly negative. And markets, as everybody says, does not like uncertainty. And getting some clarity on where the Brexit deal finishes up will certainly clear up some of that uncertainty. So yes, I think it's not unreasonable to think that we will get something of a recovery in the UK stock market. But as we all know, the FTSE in particular is very exposed to the overall global economy, and at present there's a degree of uncertainty around that, so that could come back into play. But recently we have seen the 250 index, which is much more exposed to the UK economy, actually outperforming the FTSE 100.
Yeah, I just want to go back, if I can, to take a look at the currency markets, because if we bring up the sterling against the euro, this is the daily chart, we've seen a little bit more of a pullback for sterling against the euro than we have against the US dollar. If we do get across the line and we do get this enthusiasm for British assets and people start buying into sterling, that's a difficult quandary for those that are buying into the equity markets, isn't it? Especially FTSE 100, which is so dependent on a weak sterling in order to get exports.
Yeah, it's an interesting point you make there, Jeremy, because in my view, on the one hand, you're right, you get the UK companies are supposed to benefit, or particularly the international ones in the FTSE 100, are benefiting from the weakness in sterling. But on the other side of the coin, if you're an overseas investor and you're looking to buy UK assets, a strength in sterling actually does benefit you. So it's a double-edged sword, and we've seen over the last 3 months, the FTSE hasn't particularly benefited from the weakness in sterling that we've seen, particularly towards the end of the last quarter of 2018.
Yeah. Okay, look, Paul, we'll leave it there, but thanks indeed for joining us. Paul Sedgwick from Frank Investments.